How's it going, investors? My name is Ari. I'm here with the TipRanks team, and we're going to be sharing some insights on two industry-leading, rock-solid dividend investments. Now, both of which hold the title of a Dividend King, and we're going to be using the TipRanks platform to actually break down both of these investment opportunities, as both are not only down on the year, but may very well be worth the investment for the longer-term value investors out there. So, without further ado, let's dive right in. So before we actually go ahead and break down both of these dividend stocks, as investors, I think one of the most important aspects of investing is actually having at least the bare basics of the economic backdrop in mind. So I don't think I need to go over just how high inflation actually is, because I think at the moment we're all feeling that inflationary pinch together. But it is certainly worth noting that companies across the board have been and remain severely impacted on multiple fronts when it comes to consumers cutting back on spending, which both of these stocks were and remain impacted by. Now, in addition, today, supply chain troubles have played a massive negative role over time for both of these stocks, and with investors now worried about the next Federal Reserve rate hike, there very well could be some more downside on the way for the entire market. However, as a long-term investor with a long-term investment strategy, we can look at stocks that have a history of navigating through the market turbulence and ultimately are just likely to survive, that also reward their shareholders through dividends despite all of the market volatility. Which all leads me now to talking about our very first dividend stock. That company is VF Corporation, which is one of the world's largest apparel and footwear companies, operating on a global scale, and since its founding in 1899 has successfully been able to launch 13 well-known brands. Now I'm talking about brands like Timberland, the North Face, JanSport, Vans, and Supreme, just to name a handful of them. However, during times of economic uncertainty and high inflation, consumers are not necessarily so gung-ho about the latest fashion trends, and therefore VF Corporation has ultimately taken a toll, with its price falling from $45.55 on the year, where it was once trading for upwards of $74 per share. Now that's a difference of roughly 38%. And we've also had hedge funds decreasing their position with VF Corporation over the last few quarters, which could sound off some of those alarm bells for some. But here I am actually bringing this stock to your attention because we're actually seeing some positive signs as well that may just outweigh those near-term negatives. For example, insiders are in fact buying VF Corporation with over $1.3 million bought over the last few months. There's also plenty of bullish blogger sentiment around the investment, as well as retail investors favoring the stock. When diving into some of the metrics here, VF Corporation is actually one of the industry leaders, coming in at a market capitalization of just over $17 billion, along with consistency when it comes to their earnings on a quarter-by-quarter basis. Now, their PE ratio is sitting at 17.8. That is a tad higher than some of the competitors out there, from Levi to Columbia or even Ralph Lauren. But just remember, we are talking about 13 brands that are packed into one company, which may in fact be worth paying a little bit more of a premium. Now, if we click through to crowd wisdom, we can certainly see that investors on TipRanks have actually been increasing their position with the stock, with top investors having increased their positions more so than the average TipRanks investor. As far as its growth, analysts do foresee upside potential, with the target share price coming in at $50.40 per share, with a higher target share price here of $60 per share. And scrolling down, only buy and hold positions from 4 to 5 star analysts on TipRanks within at least the last few months. Now, as we wait for an economic recovery, shareholders will be able to take advantage of VF Corporation's dividend from a Dividend King, with a dividend yield at 4.37%. As for our second stock today that's been heavily impacted by market conditions, yet making for a nice longer-term potential investment, we are diving right into Stanley Black & Decker. If you're not too familiar with this industry-leading Dividend King, it is because they're more of a behind-the-scenes play, if you will, compared to the Home Depots or the Lowe's of the market. Now, Stanley Black & Decker is in the business of tool manufacturing, and a matter of fact, since their founding back in 1910, they have become one of the world's largest tool manufacturers, bringing top brands to the market like DeWalt and Stanley. Now, the company also has a segment dedicated towards security technology, which is just another added measure of diversification for the company. Of course, all of which sounds great, but where exactly is this stock on the year? It is currently down by roughly 46%, sitting at $98.99, creating a potential opportunity for the longer-term investor. Again, talk about a company that has been experiencing a lot of turbulence from the overall market conditions, like inflation, whereas consumers are cutting back on those do-it-yourself projects, or just overall supply chain disruption matters. Now, more downside may even be on the way if the market grows more fearful, but once again, we are seeing insiders who are buying with a $1.4 million informative buy just 17 days ago. Now, we're also seeing bullish blogger sentiment around the stock, even though hedge funds have continued to actually decrease their position with Stanley Black & Decker, as they likely expect more market volatility to come and need to maintain those strong portfolio metrics. At the end of the day, we are talking about a company that has a $14.63 billion market capitalization with a PE ratio sitting at 16.2, which is lower than multiple competitors like Illinois Toolworks or Otis Worldwide. As for analysts, they too foresee some upside potential, coming in at a target share price of $114.60 per share. And given we are dealing with another dividend king, shareholders are going to be able to take advantage of yet another strong dividend, coming in at a 3.08% dividend yield. Now, investors, that's all we have for you today. Let us know what you think of these two dividend kings and whether or not they're within your portfolio. Now, if not, which stocks are you actually currently interested in or building positions with? Drop all those comments down below to let us know. Also, be sure to always do your own due diligence with all of the TipRanks tools, and keeping in mind that videos like these are not stock advice, but merely here to show you through our TipRanks platform. Now, with that said, until our next video, thank you for tuning in.